So my name is Jefford. I'm the co-founder and the Chief Operations Officer for Frac. Right. I think these two slides are, let me just sum up these two slides for you guys. Right. Number one, we are a bunch of entrepreneurs, right, that have achieved certain accolades. For example, Forbes 30 under 30, aged 35 under 35, Straits Times 25 under 25. We have invested in successful businesses. We have exited successful businesses as well. We have brought businesses from 0 to 10, 10 to 100, right? So, in other words, when you invest into Frac, you are not investing into a group of first-time entrepreneurs. We are seasoned entrepreneurs. So what is the problem that Frac is trying to solve? It's pretty simple. The common man on the street, they cannot afford investments into gemstones, contemporary art, wines and whiskies. We make it accessible for these common men. We fractionalize these physical assets, allow them to trade bits and pieces of these assets. These are all common statistics. Contemporary art, wines and whiskies, they have investment returns that greatly outweigh your traditional investments. But like I said, the common man on the street, they don't have a chance to access these investments because of the high barrier of entry. So what do? We do two things. We fractionalize the asset itself, and we also fractionalize high-value supply chains. So we fractionalize high-value assets and high-value supply chains. The high-value supply chain that we fractionalize in our case, which I'm going to show in a demo right here, is the Diamond Alpha platform. So can I have play the first video, please? So the Diamond Alpha program is pretty simple and straightforward. Basically what we did here is we fractionalize high-value supply chains so that the common man on the street can participate in high-value supply chains, right? One of the high-value supply chains that we did over here on Diamond Alpha is the lab-grown diamond supply chain. So what we do is we name the NFT that represents a batch of diamond seeds, and then we fractionalize that NFT so that people can do supply chain financing. They can finance the growth process of each and every batch of lab-grown diamond seeds, so that when the lab-grown diamond seeds are grown into rough diamonds, the rough diamonds can be sold off and the profits will be distributed to the users. But we will keep part of the profits because that will be part of our business model, right? So as you can see over here, right, when the user first begins, right, they can actually come here to view the beginning of the process whereby the person takes out the graphite tube, goes to the machine, puts it into the machine, right? This marks the start of the yield program. The whole growth process takes 15 days, right? 15 days. So when they come over here to production pipeline, there will be 7 stages, right? This is a fast-forwarded video, right? So there will be 7 stages in 15 days. At the end of the 15 days, they come here to actually claim their rewards, right? Claim their rewards. And this will be the video for the reward. Stop the video, please. Yeah, so this is the first product, right? Basically, we fractionalize the supply chain so that people can participate in the lab-grown diamond process. Right. The second product, play the second video please, is a direct fractionalization of the final asset itself. This is the asset owner portal, right? On the portal, he or she can share his entire profile on Facebook, Twitter, or Telegram. He can also click on an asset, right, to see the exact details. So this portal is specifically for the asset owners, right? To go through the custodianship, documents uploaded, etc. He or she can also view his or her revenue connected, right? The second one is the IO portal. This IO portal is where you will participate in the issuance of everything before the asset is listed on the tax itself, right? He or she can click view asset now. You will take him or her to this particular portal, right? Where you can. Yeah, so this is the part about us that's a little bit special. We actually connect real IoT technology to live stream the asset in real time, and the GPS data is connected to the Helium blockchain. Right, so those are our two products. Our business model is similar to what you guys already know. OpenSea, Binance, we earn from trading fees and listing fees. We attack 3 specific industries: auctions, US pawn house, and online alternative investments. We see ourselves in the middle of 3 sectors: Robinhood, Moomoo, Christie's, Sotheby's, Binance, Coinbase. We are the best of 3 worlds. Finally, I would like to take you to the last page, whereby if you invest in us today, for every $1 worth of tokens, you will get, for every $1 worth of equity, you will get $1 worth of our Frac tokens as well.
From my perspective, I keep seeing all this talking about art and how it's a great investment. as a survival bias, meaning that we are only evaluating the market based on the work of arts that have been sold, ignoring all the others that have not been sold. Masterworks is the clear example. They only report those that are sold, not those that are not sold. So the way I see it is like, it's not a real problem, it's not a great market, but I would like to hear from you, why do you think this is a great market? Does it come from you have a great team, by the way, but who in the team actually invested in art 5 years ago, or actually invested in lab-grown diamonds 5 years ago? Do you come from the industry, or you're just trying to propose a tech solution to a market that you guess can be hot?
Okay, to answer your question directly, we work with actual asset owners. So these asset owners, they own the assets, or they own the capacity to produce the assets. So for example, for lab-grown diamonds, we do have a partner called Diamond Labs that's actually producing lab-grown diamonds, customized lab-grown diamond jewelry for sale. So they will link us up with the expertise that's required to produce. As for the art, for that we talk to the actual asset owners, and from them we will understand which pieces of art have that second-hand value and which don't.
Yeah, you're just strengthening my argument now, because of course, if you work with partners, they will give you the things that they cannot sell. All the other things that they can sell directly with the market, they are already selling. But then, if there is no expertise in the team, then my question is, how did you guys come up with the idea of working specifically in this market if you don't come from diamond industry, if you don't come from art industry?
Yeah, we do. As in, for part of the Frac ecosystem, Diamond Labs is one of our actual ecosystem subsidiaries. So we do have expertise for the lab-grown diamond part. For the art part, in our team, we have people who are past valuers as well, curators, valuers, etc.
It's the same logic with the auction that you put as the top market. The largest majority of the products that are put for auction, they are unsold, especially in art. The largest majority is not sold. So I wonder what is the size of the market that you are addressing, or the projection that you are having now based on the numbers that you can see.
Looking at our financial figures, in terms of the size of the market that we're addressing, because when we look at the auctions industry, we're not focusing just on art. We're focusing on all high-value assets, right? And that portion itself is, based on what I flashed on the slide, is between 100 to 200 billion dollars, right? So that's the market segment that we are focusing on, right? But in terms of when we put the assets on our platform for fractionalization, I have to say that art, just specifically on art, that's one of our lowest priorities, because we understand that only the top 0.01% of art has second-hand value. Only the Van Gogh and the masterpieces have that. So actually, our first marketing strategy, one of our first IAOs will not be art. It will be something more commonly known to everyone, Rolexes. That has a very strong second-hand value market, Rolexes and watches.
I have a question. It's more related to the tokens itself. Have you worked with any legal organizations to get a legal opinion, and whether is your tokens considered as a securities? And the reason why I ask that, if it's a securities, then what is the potential return of investment for investors who hold your tokens? Because most probably your tokens can't be listed on most of the major exchange. So how do you solve this problem? Okay, so in terms of tokens, I have to just be very clear here. When we fractionalize the asset doesn't become Frac tokens. It becomes its own token, its own fractional NFT token. The Frac token is our ecosystem token. So you use the token to enjoy trading discounts. You use the token to enjoy discounts on mailback fees. So the token itself is definitely under a utility segment. It's definitely not a security token.
So I tell you what I favor and don't really quite favor about your project. Let's start off with what I favor. I think you have an amazing team over there, and I think you should really go all out, and just the way how you presented, I think that was really a good start. That does really get us a good impression. Now, but one thing I really don't quite favor, and probably maybe I want to pluck your brain juice on this, it only takes one wrong asset to be just ruining your entire project itself. And how sure can you be to really check the authenticity of the product? I mean, there are times that the blockchain can't possibly able to sum it up.
Yeah.
You can answer that in 10
answer
seconds.
that? Okay.
Yeah.
So I get your point about you just have that one bad actor and the whole thing is screwed, right? So for us, what we do is we don't just go to one valuer or two valuers. We go to three valuers and beyond to get an aggregated pricing. If three valuers come back with a price of the same asset that's too far apart, we will not
Time's
choose
up.
to list the asset, so that we know that the asset's pricing is legit.